Sensex is down about 300 odd points. The Nifty is down about 70 odd points. The Nifty is now down, what, 160 odd points.
240-point decline on the Nifty. It is below that 17,600 mark.
From the lows of the day, which is at about 17,529, we've come up about 45 points. That's a small move that is there.
Sensex and Nifty fall for the fourth straight session, posting the biggest one-day drop in a month and the worst losing streak in 5 months. 4 lakh crore rupees in investor wealth got wiped out today.
Bank stocks lead the sell-off. Nifty Bank closes below 40,000 mark for the first time in 4 months.
Adani Group stocks mark the worst day in 2 weeks as the sell-off continues. The group has lost over 51,000 crore rupees in market capitalization today, taking the overall wealth erosion since the Hindenburg report to more than 11.6 lakh crore rupees. Well, there was no place to hide on the Lal Street as stock market saw a sharp sell-off. Over the next 30 minutes, of course, we'll analyze the reasons for the fall and try to map out the road ahead as well. And joining me on the show today is Anuj Singhal. Anuj, there was a sharp fall that we saw today. We've been talking about global factors. What according to you, led to this decline, and what did you make of it?
No, I think, Sonal, the issue here is that you don't know. You don't want to put a finger to one particular issue and say that, look, this was the reason that the market was down. But you got an eerie feeling about this market for last few days that there's something wrong, that the market action for last few days has been suggesting that the market's in for some waterfall decline. And today what the market did was it broke some really crucial levels. And we'll talk about those levels, but technically the market broke some crucial levels. Now, since you asked me, and if I have to put my finger at a couple of points, I would say 3 main reasons, 3 talking points at least in the dealing rooms. First was Fed, second was geopolitics, and third was our good old Adani factor. I think the market is now coming to terms with the fact, going by the US bond yields and going by the way Nasdaq behaved overnight, that there's going to be perhaps 2 or 3 more rate hikes. In the last Fed meet, it looked like the market is very close to some kind of a peak. But I think the last few data points have clearly told you that there are 2 or 3 more rate hikes left in the system. The Russia-Ukraine conflict, I think a new dimension got added with the US president's unscheduled stop over there. I think that was the other factor. And like it or not, the fact is that today the market was again talking about whether there's some kind of a systemic risk which is opening up again because of the rout in Adani Group stocks. And while the cash market stocks have been hitting 5% circuit, the market over the last few days had seen some stability in the F&O stocks. Today, Adani Enterprises led that rout, and that also is coinciding with the kind of rout that you're seeing in the PSU banking stocks. SBI, for example, in particular, in fact, SBI is now down 18% from the peak, and it's led PSU banks down by about 21% from peak. So I think those are some clear worry points. And tell you what, if the Nifty is worrying you, look at the Nifty Next 50 and the broader market. It's telling you the kind of pain portfolios are sitting in. The broader market actually is far worse. I mean, the index is actually hiding more than it's revealing. There's pain in the portfolios and there's pain in the broader market.
Oh, it definitely is. But, we usually ask what next? What do you think? Will it see some stabilization or will it even worsen from here?
I'll say one thing, Sonal. Don't preempt any decline in the market. I think if you're a trader, if you're an investor, I mean, you should always be buying your good quality stocks. That, goes without saying. But if you're a trader and if you have a sort of mindset of knowing where does this pain end, I think there are a couple of levels that I'll watch out for purely technically. The budget day low becomes very important. That was 17,350 on the Nifty and 39,490 thereabout on the Bank Nifty. That also coincides, by the way, with the 200-day simple moving average on both Nifty and Bank Nifty. And that's why there is importance, because if the market has to make a double bottom or at least fill the gap, then those are the levels to watch out for. But more than anything, market needs stability. This is the kind of a market in which you want to see a few days of boring price action. The screen does nothing. You feel like what's happening in the market, but that will be good. Stable is something which the market wants. But I tell you what, we got the best expert joining us to answer this question for us. Samir Arora is joining us. He's the founder of Helios Capital. Samir, good evening. How are you feeling this evening?
I'm going for a drink after this interview. So in general,
it's Wednesday, Samir.
No, but today was a bad day. So in general, if you look at it slightly bigger picture, first of all, the market this year has corrected less than 4-5%, I think even less. So in that sense, you can say, and we say in all interviews, and we think also that who knows exactly where the next 5% will go up or down. And if you want to spin it positively, which in a broader sense, I think is that with all these events, particularly the Adani event, which is more specific to India, and therefore, and other things about US rates being higher or expected to be higher, to be down 1.5% this month at an index level is not the end of the world. Of course, individual stocks have fallen more, and I walked into one or two Adani stocks after the correction, and after the correction, they are down another 10%. So that is like somebody was telling me, "Khaya piya kuch nahi, glass thoda bhara." Yes. But the thing is, I'm otherwise feeling that I'm going to recover all this and more with time. Yes. And this is just to remind you that in my 26 years, much worse things have been seen.
You know, Samir, the problem is that you're so candid that you don't let me ask the next question, because my next question was exactly going to be that what are you doing with Abuja that you bought at 385? Or, you know, you said that you even were buying Adani bond.
No, Adani bond was personal. That is very small. Yeah. But for the fund, we had bought Abuja cement and a little bit more of Adani port. And I think that, you know, if I look at the new news, now I think the exaggeration on the news part is too much exaggeration, and it should in theory not move the stocks, but who knows. For example, this new story from Forbes that some $200 million leverage, I mean, this pledging was done. Now, 200 million looks a big number to the world, but if you say that somebody's net worth is 30-40 billion and they had 200 million more of pledge or less of pledge, does not in theory bring risk to the market in some sense. Now, you may say whether legally it should have been disclosed or not, that there are different interpretations, which I also don't know beyond a point, but whether the shares have to be pledged or if the holding company is pledged. But either way, if you have 200 million total extra news of 200 million being pledged and not exactly reported or reported, I don't see how it makes a difference to the world, except, okay, add 2 more 100 million to their pledge. So things like that, I think, are a bit too much. But, you know, right now, I really feel like buying more, but I'm not bought.
Look, I got that point, Samir. You know, the question I'm trying to ask here also is that while the screen is screaming it loud and clear that the market believes that there could be some systemic risk, otherwise SBI should not have been down the way it is over the last few days, right? But is it some kind of an overreaction? Is it a buying opportunity?
So that's what I'm saying. For the very other stocks, which really had gone up a lot, 10, 20 times, nobody, not just me, you know, very few mutual funds, very few FIs had it. And so therefore somebody could say that the stock price has to correct more or go back to maybe 2020 levels, and then somebody will look at them. But in the case of Adani Port and cement of course now it's lower than their own acquisition price. And and the Adani Port was looked at more as reasonably valued even during the last 2-year rally, Adani stocks. Therefore, I feel, I'm talking about those two stocks, that therefore I feel that it is not, I mean, every day I feel that I'm going to recover, but I think one day it will. And for the other stocks, they may fall, but I still haven't figured out the systemic risk, which means, see, for example, if all these companies announce, which they should, that they will not expand as much, that they will not put $50 billion in hydrogen and all that, those numbers were so big. And if those numbers are not there, it brings to the rest of the group some steadiness and some discipline and some disciplining by the market. So if anyway people were not buying those stocks, these institutional guys, and now they are not buying them, it should not matter to the rest of the world. I think it is actually, in a big picture sense, positive for the group that because individually we were all too small to say to the management, which has 100 billion net worth, that, you know, don't be so aggressive. So collectively the market has said that you bring down your group or your own net worth by whatever, X 50%. And from here you start a sustainable business instead of always having to defend being, you know, the 200 odd billion group in a country which is 1.5% of the world and in infra and all that. So I think this makes it more sustainable for them. I am interested in my two stocks, which I think are the safest. And overall, I think in the group there are many assets. God forbid if something needs to be done, but I don't think they will.
No, actually, sorry, Samir, my question was more related to the market. Is there something else about today's fall? Other factors contributing to the market's decline?
Well, today's fall is because the US corrected also one of the biggest, I think, in last 5-6 months. And then you will think about the global connection. But if you look at that, I think it was more India than global in the sense that IT fell less than the market. So if it was a global angle and a NASDAQ correction, IT should have fallen more than the market. Therefore, in some sense, it was this Adani issue and whatever local issue. But that, according to me, is overreaction by the investor and not that it actually poses a risk. That's what I was saying. That if the reaction looks more Indian driven, simply from the point that IT fell less than the market.
Okay. Samir, good evening. This is Sonal this side. Now that you're talking about it being an overreaction as well, I wanted your thoughts on Bank Nifty because it is below that psychological mark of 40,000 as well, 200 points away from the 200-day moving average. It's fallen quite sharply from the highs. Do you think this is a good opportunity to look at some of these banks? SBI, for instance, and it was mentioning it has seen a sharp fall over the last couple of days.
If I say that, it'll look as if I'm talking my book, but I have, these are my biggest holdings. But if, like banks are our biggest holding, but if you had asked me, what is the Bank Nifty bank index, I wouldn't have known what is the level because we don't do much with the index in the banking sector. But broadly speaking, we have State Bank, we have ICICI, and we have HDFC Bank, and we are still very bullish on them. And again, we don't believe that there are systemic risks brought by Adani or anybody else, at least not yet in anything.
Okay. So, Samir, the other issue is this whole geopolitics. Do you think that's having any role or is this just being overplayed right now?
So that there's an angle there. Because if you warn publicly China that don't go to Russia, and then then these guys are going for that meeting, whoever that big fellow is going from China to Russia, and then the president lands up in Ukraine. So obviously it increases some tension. But did it literally lead to something more happening in our market or in the world yet? I don't know, because these things are all or none kind of events. Who will sell 2% more for that reason? That this might become. So prices might come down, but no active fund manager will be able to take a call on these issues. Actually, if you look at a positive, let's do one positive. That is in January, the FIIs had outflow, and the idea was that these guys are going into China and there's a China opening up trade. And to me, it looks that that trade is already over. You can see that just from the performance of India versus China this month or 1 month and all that. And therefore, I thought that after that initial sell-off, that people will go back to their normal thing where you're putting money into India, maybe putting a little bit into China. But the Adani issue then came up. But separately, if you look at it, that with the Adani issue, with the FII selling, with the global issue, whatever you may say, the market this month is down less than 2%.
Okay.
And it's not the start of the month. It's like you're coming to the end of the settlement period. So quite a bit of time has passed since all these events have come, and still it's down less than 2%.
I was actually looking at your tweet where you said that all who sold India to switch to China in January have gained net zero. So that's exactly the point you're making here as well. Your thoughts on IT, Samir, because that has been one sector that supported markets so far. The index is up around 7%. But because of the global issues, the problems that we are talking about in the US markets as well, do you think this is a space which could see further declines?
Well, that is what we are betting on, because we sold it in June, July last year, and it worked for the balance of the year, but definitely not this year. But I would think that if you are connecting it to global issues, then IT has to be down. So the whole thing will depend on the guidance of the sector in April. I would think that the guidance would be 6-7% in constant currency terms, which I don't think anybody would be interested. But if their guidance is in 9-10%, then yeah, that means the market, the reality is more bullish than I think. My thinking based on global issues is that it will be low single digit and not the like nearing double digit kind of growth. If you see even McKinsey type guys who advise others are firing, the Wipro guy can't pay a full salary. I mean, these things can't be normal unless somebody says this is normal day to day working in IT companies, that after you're hiring people, you're asking them to join at 50% salary and things like that. So you can see it from anecdotes, but the market has refused to believe it. And we have to, now that we don't have it or very much underweighted, we have to see for a few more weeks, months till the guidance season starts, and then we'll see.
Samir, in my last conversation with you, and I mean, you can correct me if I'm wrong, I think you had made a point that maybe time has come to look at all these new age stocks because they have now corrected a lot and froth is out, and maybe some of them are offering value. And that portfolio would have done well for you. So what
we have
next?
bought two stocks, and both are up this month, and one of them is up a lot, which is Paytm.
Yeah.
Maybe up 18-20% this month only, and Zomato is up 5-6%. But because we had bought it before, then it went up, then fell. Broadly, we've come back to making only some 2-3%, but it's not bleeding us. So both have $1 billion in cash. Both are nearly breaking even pre-ESOP. And you know, people made a lot of fun of adjusted numbers that Zomato put out, which in a sense, these are all new companies, you know, so they all put out these things which, if they took any senior market guy's advice, he would advise them. For example, I also thought that the Paytm, Mr. Vijay Shekhar should not have tweeted that we had so many analysts, because, you know, we know the public makes fun of these things, that you are counting number of analysts. Now, these things are easy to avoid, but it doesn't matter. As long as both these guys are breaking even genuinely, which I think both are, just by calling it adjusted, the Zomato guys particularly became butt of, you know, millions of jokes on Twitter. But the reality is that both have survived with dignity, as in there are very few survivors in these businesses anyway. And someday at some valuation, they make sense, and to us, both make sense right now.
Yeah, adjusted was the new word which was being used.
Yeah, which was unnecessary. Or at least you put it on a star or something.
Absolutely.
Instead of calling every number adjusted. But obviously, nobody knows how much fun will be made.
Yeah, absolutely.
So,
no, but I think you make a valid point. And at least, you know, even if they are being made fun of, it's better than what 2 years back their commentary was, when it was a complete disdain for the listed market. Yeah.
According to me, the logic is that both have $1 billion type in cash. And if you don't every quarter piss off the investor because you are losing 30 million, 20 million, 50 million, and you break even and slightly improving, then you're buying an option.
Absolutely. Samir, always a pleasure to talk to you. Thanks a lot for joining us. Have a good evening and enjoy that drink.
Okay, bye.
Bye. Thank you, Samir. Okay, let's do one thing. We'll take a break. We'll come back and analyze some more top stories of the day.